gonna let you turn it.
What's up, y'all? Let me figure something out. What's up, y'all? All right, so right now I'm sitting with the exact person that helped me get into real estate. So if you know my story, you know I started with my landlord giving me a building basically on consignment until I could find the funds to pay him back. The person that helped me find the funds is sitting right here, and she agreed that answer all of your questions, help you with whatever you needed to know to get into real estate. So if you got any questions, just put them in the chat, and we'll go from there. But I'm gonna let her introduce herself.
Hi, good morning. This is Teresa Jones with Loan Depot. I have been a loan originator about 32 years, and my goal is to always help people who are first-time home buyers or people that just don't think that they can buy a house, give them the answers, try to help them find money to purchase properties with the grants and down payment assistance. And it's just been a pleasure helping Donald with all of his real estate goals, and he's doing a fantastic job.
All right. So you said how long you been doing it?
32 years.
30 years? Wow.
30. Long time.
32. All right. So what exactly does a loan officer do?
So you have to become licensed. You have to take some classes and then a very intensive class to be able to be certified. So we have what they call NMLS numbers. Once you are certified, then what you do is you try to help build a database of people. You reach out to your friends, your family, find out who is looking for a house, who has had difficulties getting financing, and what we do is we also try to find the best fit, because not every single person that buys a house has the same, what I would call, fingerprint as somebody else. And so, for instance, if your mom says, hey, I never had to do this, well, the rules change very frequently. And so what someone was able to do in the past, they may not be able to do in the future. So our goal is to guide you through all of the regulations and get you into the house that you're within your budget, obviously, that you can afford.
Okay. And where do you loan people money at?
So across the entire state of Illinois and Iowa, and we also have an inside sales team at Loan Depot. So even if you're living in another state, I can refer that to our company, our members, and we can get you financed there as well.
So all across the United States?
All across the United States.
Okay. So if you in Texas, you can get a house through this company she worked for, wherever you at. Okay. So how do they get in touch with you and your company?
Okay, so there's a couple of ways that you can get in touch with me. You can text me. My phone number is 309-631-6955. So by text, you can email me at thjones@loan, like I'm giving you a loan, depot, like Home Depot, DEPOT.com, thjones@loandepot.com, or you can go to my website and fill out a very quick application, take you about 10 minutes, www.loandepot.com/TH
Okay. So Jesus had a question. He said, what does his credit have to be at to get a loan?
Well, Jesus, that just depends. We have down payment. We have programs where the down payment can go down as low as $580 if certain criteria is in place. It just is a good idea if you have some money, a little money saved up. That always helps if you have a lower credit score. If you have a 640 credit score, we can get you assistance. Like Illinois, for instance, has Illinois Housing Development Authority, and that's a $6,000. It's called the Opening Doors Program, but that can run out. But if it does, we also have other programs through the Illinois Housing Development Authority. In the city of Davenport has a down payment assistance up to $10,000. So combined with what you may have saved, and we can basically get you into a house relatively inexpensive.
Okay, so that's good. Like a lot of people just don't have the money to get into the house. So we got programs out here that's gonna give you the money. So the money is not the big issue. Credit, she said, what, 580 you said?
We can go down to a 580, but though you definitely would have to call me. I would have to look at your entire profile to make sure that you were eligible. We are very, I would say, conservative on the fact that when you're trying to get a loan, especially a mortgage loan, we don't want to see that you've had late payments in the most recent 12 to 24 months. So if you're inconsistent in your payment pattern, that is a cause for concern. So somebody with a 580 may just be someone who's out of bankruptcy in 2 years and they only have a very limited amount of reestablished credit. And but they've been really good. They paid their rent on time. They can show that they paid their utilities on time. They have maybe one credit card or installment loan that's on their credit report that shows that they have been diligent in paying that on time. So we don't always know what the algorithm is to why some people's credit scores are higher than others, but we will work with you. And so that's sometimes called a manual underwrite. So our underwriters will physically look at the file and say, you know what, this person looks like they are doing their best at reestablishing their credit. They're being consistent. So yeah, we're going to give them a loan.
Okay. All right. That sounds good. So credit is not a big issue. Down payment is not a big issue. So what about their job history? Did you go into that?
So job history, we'd like to see at least 2 years of employment. So if you have been working, they're not necessarily in the same field. If you've been working, let's say where do you work at?
I work at LeClaire Manufacturing now.
Oh, okay.
I worked at Sterilite, but now I'm at LeClaire Manufacturing.
Okay, so let's just say, for instance, he comes and tries to apply for a loan again. So he's had 2 different jobs in a 2-year period.
Yeah.
We can still finance him.
All right, so even though I worked at Sterilite and I changed jobs, I only been on this job for 4 months.
Yes.
I could still get a loan.
Exactly.
Oh, okay.
And say, for instance, you left one job and you haven't started your other job, but there's like a small gap in there where you're trying to get a better paying job.
Okay.
And then we can just make sure that there's no huge job gap in there, and we can go with an employment letter. So you maybe haven't even started yet, but you have an employment letter that says we intend to hire this individual.
Right.
They're going to be working 40 hours a week, and they're going to be making X amount of dollars.
So what if the person left the job and make less money?
Well, that just means that you may be able to qualify for a house still. It may not be
the big house.
Bigger house.
Okay.
Yeah.
All right. So what about my buddy that owned his own business?
Okay. So I did a person that owns their own business. They've been in business for, I think, 6 years. And we wanted to do a bank statement program. So let's talk about that. So a bank statement program is basically you are a self-employed person, and when you do your tax returns, a lot of times your accountant writes as many things off as possible. So you might have gross sales of $200,000, but your net income is $5,000, and that's what you're paying taxes on. That is usually not going to get you much of a house.
Yeah.
But your bank statements show that you consistently are depositing over $10,000 to $15,000 a month, right?
Okay.
And so their bank statement program, you cannot have any overdrafts on that. It has to be stellar account. It can't be commingled with your personal funds, so you can't have a bank statement and then have little bitty deposits going in or paying little, things that are not pertaining to your business.
Okay.
If it's a business expense, that's fine. So don't mix up your personal account with your business account. Have a business checking account so that we can use the 12 months bank statements or 24 months, because that'll give you a better interest rate. And that's what we use to qualify you for a house. Now, obviously, someone who is using a bank state program is a little bit more risk. So the credit score criteria is going to be a lot higher.
All right. So like 700. Or...
That would be ideal. 700 is going to get you the best. If you're at 680, you're going to have to put more money down. So your credit score also determines, if you're a self-employed person, how much money you're going to have to pay.
All right.
For a down payment. Yeah.
All right. So basically that go for investors, investors too. Like me, I'm about to be considered an investor because of my properties will be in my business name. So if I want another property, I'm gonna have to pay 15% down.
So if you are, now that was for somebody who was buying a single family owner occupied property.
Okay.
Okay. So investors, let's talk about that. So if you are going to be an investor, which you already are because you have a lot of properties, we have a program. It's called the renovation loan, where you can purchase a property for 15% down, and we will give you the money to renovate it. So the 15% is based on the price of the house plus the renovation. $50,000 for the price of the house, $50,000 for the renovation. So you have a $100,000 loan. We want at least 15% down.
Oh, for real?
Yeah.
All right, that sounds good. All right, and what did my credit have to be for that?
Well, you're gonna probably we'd have to run it because obviously, like I said, we have a system called DU. It's a desktop underwriter. It's an intelligent system, and it takes all of the criteria and it does an algorithm on how successful this person will be on repaying their loan.
Okay.
So if it says approved eligible, then you get the lowest down payment.
All right.
And so it just depends because your credit, you may have a lot of money in the bank. And the system may say, oh, I like this person. He might have a lower credit score, but it likes the fact that you have a history of savings. And maybe you don't have a lot of debt. You may get approved for that loan. So we would have to run it. Everybody, like I said, it's like a fingerprint. Everything changes with each person.
All right.
So we would just run it through our system and see.
All right. So what about debt to income ratio? Can you talk about that for the beginners that do not know what a debt to income ratio is? Because that was something that held me back. So could you explain that just a little bit?
Sure. So there's two ratios that are involved with getting a loan. The first one is what your housing expense is based on what you are going to purchase, including your principal and interest, your taxes, your insurance, and if you have to have private mortgage insurance or MIP. That's considered your top ratio, and they take the amount. Let's say it's $1,000 for your housing expense, and you make $3,000 a month. And when we talk about your income, we're talking about your gross income, not your net. So 1,000 divided by $3,000. What is that percentage?
That'll be 30%.
Right.
33%.
Yep. So 30%. 30%. That would be your first top ratio.
Okay.
Okay. So you have $1,000, and let's say you have $600 or another $500 in expenses. Let's say you have a car payment, and so now you got $1,500. The top ratio is just your house payment. The bottom ratio is your house payment plus your debt.
Okay.
And then we take that dollar amount and divide it about how much your income is. That comes with your bottom ratio. Now, ideally, now we can go up to 50%, depending on what your credit score is. You want to try to do a budget first. The first and most important thing is you don't want to be house poor. So you develop a budget, and once you know what you can purchase, then what we do is we run it through our system and say, okay, based on what your debt to income ratio is, you can afford this amount of house.
Okay.
But also according to your budget. Sometimes you can afford more house, what we can approve you for, than what you want to pay.
Okay.
So the bottom ratio again is your your future housing expense plus your debts.
All right.
And then we divide that by your total gross income.
All right. Okay. So Matt said he want to get into a multifamily and he had $10,000 saved. Could you give him a little bit of advice on what steps he need to take? Where you at, Matt? Where you live at?
So
Indiana.
Okay. So Matt, we finance on the residential side up to 4 units. That's still multifamily, right? Anything outside of 4 units is considered commercial. And so you would have to, and I don't do commercial lending, so you would have to actually ask them. Now, a lot of times, like for instance, you can go to a commercial lender, and depending on how strong your credit is, and then you said you had $10,000, they would have to tell you, they usually sit around a table and there's like a committee and they determine whether they're going to let you have a loan or not. Those are a little different than residential. So our residential, if you're going to own, are you going to own or occupy that property, multifamily? Because you can use an FHA loan and get a multifamily up to 4 units and use the money that you're going to be collecting from those rents to help you qualify for your mortgage payment. We use a percentage of what the total rents are. And so you could probably get that based on what price range you're in, use your $10,000 towards that.
Okay. So you said your credit is 730, you got $10,000. You ready to jump in there, man. If you got 2 years of tax return, just go online, go on her website,
go online.
Loan Depot.
www.loandepot.com/TH Jones, and I would be more than happy to run some scenarios with you. Man. And see what I can get you approved for.
Like the hardest thing is finding a deal. In my case, like in my experience, the hardest thing was finding a deal. Like getting the money, that's the easy part because they print money like it's nothing. So you can always find the money. You just got to find the deal. So if you want that multi-unit and you want to live in it, a FHA loan.
Perfect way to start.
Yeah.
Any person that is building wealth through real estate will tell you that if you're going to do your first property, you should buy an income producing property so that your rent that you're collecting is actually paying your mortgage payment.
Yeah.
So that's what
I did. And I like to look at it as in my case, I was in prison and I was running a store and going to work, so I didn't have a living expense. But I still made money on the side, and I got to save all of that money. So when you get a multi-family, that's essentially the same thing that you're doing. You living for free, and you going to work, saving all of your money. So that's how I got ahead and got the next property and the next one, because I didn't have a living expense. Now I live in a 3-bedroom, 1.5 bath, and I don't pay no rent. Right, so that's the key to understanding this real estate thing. We all want that nice, big, beautiful house on a hill, but we don't want to have to go to work for the rest of our life to be able to pay for it. It's a 30-year mortgage. If you're going to work for 30 years just to pay for this house, like that's backwards. I wouldn't advise nobody to do that. I would advise to get in that multifamily, start making some income and getting ahead. So, is it like anything like these beginning investors, these beginning people need to know, like as far as what to do?
Number one, keep your credit straight. Your credit. It was easy work with Donald because he had his credit on track when he was purchasing a property. So here's the thing about it. It's just like, if you know that you don't pay your bills regularly or you miss a payment here, and you can come up with all the excuses that you want, COVID-19, which is not going to fly anymore, because we're way far away from that, right? Yeah. So it's like, if you keep your credit straight and you keep your debts low, so if you have a credit card, you're not taking that credit card and maxing it out every single month and then just making monthly payments on it. Even though you're making those monthly payments on time, it's not really being responsible with your credit, right? Yep. So you're probably utilizing it to live, which means you probably shouldn't have that credit card. So if you're going to be an investors, if you think about it, that you're much more of a risk than somebody is going to live in the house, because when you're living in the house, that's where you need to stay. If you're an investor, you got other people living in your property, and you might say, you know what, I don't feel like paying the payments anymore, and you might let it go back. So that's why you have to have more down payment. That's why you have to have better credit scores, because we want to make sure that you are a fiscally responsible person that we are loaning money to. because the mortgage companies don't want your properties back. We're not in the business of real estate. We are in the business of making good loans.
Okay.
Yeah.
All right. So she said credit is the number one thing for these new investors. So credit, that would look like making all your payments, having some accounts on your stuff to make it look like you know how to use credit. Go get you a credit card. I advise everybody to go to their credit union, apply for a credit card. That's what I did. I got a dealer's card, a credit union credit card, and some furniture. And that was how I built my credit up. And I got added as an authorized user on one of my friend's credit cards. So now I had credit history. So I had credit history that's looking good and some stuff on there. So that's how you build up your credit. Inbox me if you need any help doing that. That's what I'm here for. So
we have to talk about that authorized user thing.
Okay.
I just came up against a new condition that if you're getting a conventional loan, if you have one credit card and you are also on one credit card that has an authorized user on it, you may sometimes get this trigger that states that authorized user account, you either have to prove that that is a non-borrowing spouse's account, or that you are the person that has been making the payments on that account, which in your case, you probably didn't.
Mm-hmm.
So the theory with that is if you're going to have an authorized user, yes, it helps you with your history, but you also need to have at least 1 or 2 trade lines on your credit report that are yours for at least 12 months.
Okay, so if they do have an authorized user, they won't count that as...
Because they call it skinny credit.
Oh, yeah?
And I just came up against that, and I've never had that before.
For real? So what happened in that situation? Did they get that loan or no?
I'm working on it right now. They will get the loan because I will get them approved.
And that's one thing about it. She will get you approved. Like on me, like
yeah.
I was so stressed out going through that process.
Yeah.
It was crazy, but
yeah.
because they wanted all of these documents, they wanted me to do all of these things, jump through all of these hoops, and it got frustrating because I think one issue I had was I had bought a house. I forgot what it was.
You bought a house and didn't record it.
Yeah, I did. It didn't record, or it was that, and it was just like a whole bunch of stuff.
Yeah.
It shot my DTI, my debt to income ratio up. It was just like.
Oh, I remember what it was. You had the name of the the apartment building wasn't in your name.
Ah, yeah, that too.
But it was on your tax returns.
Yeah.
So he's paying taxes on it, but it was in somebody else's name. They were like, my underwriter's like, what's going on here?
It was just because I thought I knew what I was doing and I didn't. But that go with it. Just jump out there, make mistakes, learn from your mistakes, and don't
use
do it
an
again.
attorney.
Yeah,
If anything, when it comes to real estate, do not play with doing these online, you can do it yourself recordings. I'll tell you about another thing that I had a client, she was buying a property that was listed as a for sale by owner. Mm-hmm. So she had a for sale by owner company representing, or the person that was selling had a for sale by company representing them.
Mm-hmm.
But this person did a do-it-yourself quitclaim deed to take his estranged wife off a title. But he didn't file it correctly, and you can't do that in the state of Iowa. Oh. They have to get paid. So when they found her, because my buyer was ready to go to closing. Mm-hmm. We had all the documents there. This wife would not sign off to sell the property. She said she can go find another house because I want to get paid, and the estranged husband didn't want to pay her.
Wow.
So she just closed yesterday on a brand new house, which she did in a short period of time. But that person, so if you are a seller, you need to have an attorney. You need to know or have somebody who knows what the rules of the real estate are in that particular state and county. Iowa and Illinois are way different.
Okay.
Yeah.
All right. So with these for sale by owners, is it anything like that people need to know, like what not to do. Like if you ride past a house on the street that say for sale by owner, and kind of like what I did, I just gave them the $10,000, the down payment, and we
Did a contract.
we did a contract.
So that's different.
Is it anything that they need to know about that?
Well, you need to also have. So I am an advocate for having attorney legal representation because it's always better to have it before than after the fact. You want to make sure that it's recorded properly because if a recorded contract is treated differently than just one that's not recorded, because in your situation you were able to do it as a refinance because you had money invested, so we were able to use the money you paid already towards your down payment and closing costs, and you didn't have to come up with any additional funds out of your pocket. So it's very you need to make sure that you're doing it, setting it up the right way.
All right.
But you can purchase it for sale by owner. You can even have real estate agents. If you're working with a real estate agent, they can help you on for sale by owner. That's what. So one of my realtor partners is Ashawn Thomas in HDTV. He was able to assist the borrower, because it was his client. She saw a house that was for sale by owner. So don't ever think that you can't have a real estate agent help you. It's always better to have somebody assist you. Now, the person that pays that real estate agent's commission is a person who is selling the property.
Okay.
So for a borrower, they don't cost you anything.
All right.
So, and if you have a really good agent, they are really good at negotiating with that particular seller. Just to explain, you really should have a real estate. Don't go it alone. That's my thing. You can buy for sale by owner. I'm not a real estate agent, so I don't want to try to do the things that real estate agents do. There's a lot that's involved. They do that I don't have to worry about. I can just stay in my lane.
Okay.
When you're for sale by owner, they may think you're doing certain things, and it's like, I hardly even see people's property. So, I definitely don't want to. I have my real estate agent license, but I'm a licensed loan originator. I don't want to sell real estate.
What is it a headache, or why you don't want to do that?
Well, it is because people are looking at you for the answers that typically a real estate agent would do or an attorney would do. I don't want to be liable for something because that's not my field.
Okay.
Yeah.
All right. So he said, when is the best time to start looking to buy?
Now.
Yeah. Always.
Yeah. So here's the thing about it. People are always saying, oh my God, I'm going to wait till the interest rates come down, right? There's a saying in the mortgage field, you date the interest rate, but you marry the house. So let's just say that you get a house and the interest rates are 7.5%, which is probably about normal right now. 7.5%, they're creeping up every day. So you buy the house, but now next year, the interest rates come down. You have accumulated equity in your property, and you have the ability to refinance that. And with Loan Depot, we are actually give you a lifetime guarantee. So when you refinance, you don't have to pay any lender fees, and we will actually reimburse you for the appraisal. So your costs reduce significantly by being a client of ours.
Okay.
So you could always refinance the property.
So the interest rates really don't matter because they always change, and I'm preaching investment properties, so it really doesn't matter if you making the income off of the property. So that's what I really love about real estate is we in it for income. We not in it to make big bags of money. We in it for the long haul. So that's a good way to look at it.
Yeah.
You got any questions?
Hi.
I appreciate you for coming down here. So let's go into how I started and how you helped me, just to give people a better understanding. So I bought the duplex from my landlord on contract, and whenever I met her, we refinanced it. So that's what she helped me do. She helped me refinance it, get the money to pay my landlord back. So whenever I sat at the table with her, she actually brought me another deal. So can we go into that for a second?
So I have been in mortgages for 32 years. So that obviously means I've come across quite a few people, and a lot of times My people start accumulating property, and for whatever reason, they decide that they don't want to. They want me to find them a borrower that may be looking for property. So Donald had expressed an interest in building his portfolio, and one of my church members who had a large portfolio didn't really want to put it up on the market. He said, "Do you have another investor? Do you have an investor that's looking out? I'd just like to do a deal with him." And so basically, I was like an off-market transaction. I wasn't the real estate agent or anything, but I bought two like-minded people together. So sometimes my database is looking for certain things, and they'll say, "Hey, keep a lookout for me if you run across this," and if I'm able to put them together. And that's what he had. I think there were
It was 11.
11 properties that he was able to purchase. And then the nice thing about it is so you haven't hit, most of the renters are long-term renters, and they get nervous when there are signs in the yard, and you know, because they don't know what's going to happen to them. That's a shout out to the people that are thinking about buying that are currently renting. That's why you want to be a homeowner, because the landlord can sell your property and raise your rent anytime they get ready to. You have no control over that. So become a homeowner if you're not already one.
Yeah. So she helped me get these other 11 properties. So that's why it's important just to get in the room with people, because you never know who you in the room with or what kind of deal is going to land in your lap. So when we went to refinance that, she just was like, "Hey, I know where it's another deal at." And she actually been doing this for so long that she was like, "Oh, I know where the deal at. I know where the money at. You just gotta sign the paper." Like basically, that's what it seemed like. I was just signing the papers, and she was holding my hand, leading me down the way. So just get in a room with people that's knowledgeable, people who know more than you, people who got more connects than you, and that's whenever the deal's gonna start coming in. But Mike, what's up, Mike? He said he got 12 bands. He got a house, and he wanna get some cash to remodel it. Can you help with that?
Do you live in the house, or is it an investment property?
Is it you live in it, or is it an investment? Investment.
So it's an investment property. So right now, the program, my renovation loan is for purchases. So if you have, but we do have home equity lines of credit. So there's a couple of different ways that I could think of that you could get money out to make the renovations on the property. So if you just want to inbox Donald, and I'll get my information, and I'll give you we can talk offline.
Okay, so you bought this crib, now you living in it, and it's an investment part. No, you're not living in it. So, yeah, man, like you already started, so you in good hands. Just stay in contact with her, because she's not lying. She can help you with whatever you need to do.
And sometimes it's not something that Loan Depot does specifically, but I can, I have relationships with commercial bankers, and depending on where you're located at, we can try to assist you in any way that we can.
All right. I really don't have nothing else off the top of the head. Do you got anything? No. What questions what's your biggest motivation about real estate? What you want to do, like?
Well, I'm gonna be a homeowner.
Yeah.
Okay.
Yeah. I've been at the same place for like 5 years. I let my second landlord is now selling the house to a third landlord. My rent got raised.
Right, all those things, right?
I was just working, like getting my credit up. This at like a 6. I think you gotta be at least 640.
No, so 640 is the threshold for getting access to some down payment assistance programs. Which state do you live in? Okay, so Iowa, as long as I can get you approved, there is a program, and if you buy in Davenport, it's called the City of Davenport. So as long as you meet their debt to income ratio, it's kind of income restricted, but it's also based on how many people are in your family. So you can make more money if there's more people. And you are only responsible for half of the down payment, and then they will pay the rest of your closing costs. So I can get you with a real estate agent. I can get you approved, get you with a real estate agent, and they can go and take you out and see if they can find you something. It's really not as complicated. So Donald was talking about the paperwork. So here's what you need to do. Number one, make sure that you know where your W-2s are for the last 2 years. Keep your paycheck stubs and keep the consecutive paycheck stubs. And we usually only need about 4 of them, but continue to collect them up until you get ready to close. Know where your money is at. If you have money at home right now, I cannot believe the amount of people that stick money in, they just have it at home. $30,000 or $40,000, and it's like, deposit your money in your bank account, and then as long as it's in there for 60 days, we know that it's your money. Then you don't have to like get a gift or anything like that. So have your money. Make sure that when you get ready to produce, because we ask for your last 60 days of bank statements, there's not overdrafts in your account, or you're not getting a bunch of deposits that we can't track, like Cash App or Venmo, or, unless we have to, it just makes it so that you're having to document more things. I always tell people, teach a first-time home buyer classes. If you're going to start to purchase a house, and let's say you want to get one by December or January, open up a savings account. Have part of the money that you're going to use for your down payment, if it's going to be coming from your payroll check, just have your automatic deposit, because that's traceable income and it will show your employer name, and just have that money accumulate so that you're ready to go. Have at least 3.5% of, let's say, $100,000 house is $3,500. Have at least 3.5% saved up in an account. We have programs that are 3%. We have programs that you only have to do 1%, but that's just a good rule of thumb. Make sure that your payments on your credit cards have been paid on time, and that you don't have. Now, sometimes people have medical collections, and sometimes it affects your credit score, sometimes it doesn't. So we can just take a look at that. So I always have people, hey, pull your credit, let me look at it, and let's put you on an action plan that says, I want to buy a house by January. I'll say, okay, here's what you need to do. Now we have a young lady with us. What was your name?
Dimple Dixon.
Dimple Dixon. Oh, did you fill out an application? No, somebody else. Okay. Well, Dimple Dixon is here, and she's off camera. But I would just say, hey, this is the plan. This is what you need to do by this day. You should be able to start looking at houses, and you can close by this time.
Okay. So he asked about the first-time home buyers program.
Where at? Where are you located?
Where you at? Tulsa.
Most states have first-time home buyer programs.
I think he in Iowa, and he a self-employed. He got his own business, so that's who we asked the question.
Yeah, so that's something I would have to take a look at to see what you qualify for.
You have to look at his personal.
It's just, you can inbox Donald and then or reach out to me. And
all right, so she had to inbox you, and I tagged her in the live too, so you can inbox me or her, and she'll tell you about the Iowa program or what you got to do, because you own your own business. So it'll probably be a little bit different for you. But somebody else said something about I forgot what they said. Oh, I didn't get that. Is it possible for Linda Subaru use some money? I don't know what that means, Matt. All right, he said his business in Illinois, but he live in Iowa. Do that matter?
No.
That don't matter.
Mm-hmm.
Okay. Yeah, man. I want y'all to do me a favor. Just share this video, just so other people can see it. Maybe reach out to her. This information might not help you, but we don't know who it'll help. So just share it, and maybe they can reach out to her, get them in the house, because they want to get in the house, they're ready to get in the house, and they just don't have the information. So maybe this will help them. Is it possible for lenders to lend you money and use your credit to purchase another property? So basically, I think what you asking is, can you get like 2 different loans? So I think that's what you
Sure, if you
asking.
can if you can qualify for it, absolutely.
Yeah, so that's basically what I did. So I went through a hard money lender. So this is not a bank. This is not a credit union, a mortgage company. This is just a person that has money that want to lend it to you. So that's how I.
That was for the 11 properties.
Yeah, that was. For
He did his
$11.
primary one through Loan Depot.
Yeah. So my primary, I went through her. I went through a bank to get a conventional for my second house, and then I went through a hard money lender to get my portfolio of houses. And with another house I just paid the seller payments. So it wasn't nothing through a bank or nothing. It was just a person trying to sell a house. I just made payments to him and bought the house. So it's all different kinds of ways that you can get these houses and get into real estate. But my main thing is for you to just to start. Don't be scared to start. Like we so scared to fail because that's what school teaches. Like don't fail, you're gonna get an F. But that's not the way the real life teaches. If you don't get that F, you will never learn. If you don't fail at something, you will never learn. So just jump out there. And if you scared, just have somebody hold your hand. That's what she's here for. She's here to hold your hand and give you all of the information that you need. So reach out to her, inbox me if you need anything else. But I think she answered all of your questions, so we're going to let her go. But I appreciate y'all, and it's going to be more to come.